Well, stocks seem to be signaling a pause in the rally today as investors await fresh minutes from the Fed. But our next guest warns that the market pricing in rate cuts next year could be, quote, very concerning. Eddie Ghabour, Key Advisors Wealth Management CEO and co-founder, joins us now. So, Eddie, as we were just discussing here, a lot of investors perhaps looking at this potential for rate cuts in 2024 as something bullish, and you say not so fast. Break down your base case.
Yeah, look, that's exactly right. And the reason why, so like the bullish case right now that for next year for the bulls is no recession, double-digit earnings growth, and the Fed cutting rates. And in my opinion, if we don't have a recession and we have double-digit earnings growth, the Fed is not going to cut rates. And I don't believe that pricing in rate cuts is bullish at all. Matter of fact, I'm very concerned as to why the bond market is pricing that in. To me, it's signaling that something is going to break. Because again, if you look back on history, when has the Fed ever cut rates when the economy was in good shape? So if the bond market is starting to see something that the equity markets don't see, that should be very concerning. Because again, I do not believe this Fed will cut rates unless something breaks. And right now, when they're pricing in rate cuts in May or June, the equity markets will react to that earlier than that. So I think the setup is going to be very challenging over these next 3 months for the bulls, because I don't think the rate cut case is bullish at all.
So then when you compare that to also what we've seen with earnings season, some of the warnings that we continue to get about softness in the consumer as well, I'm trying to figure out then why a market's still so enthusiastic then, given that the writing's on the wall from the Fed, who's been very consistent in their message, and also what we're seeing from the consumer as well, especially when you look at the likes of a Walmart.
Yeah, so look, when you look and study bear markets, and I do believe we're still in a bear market, the last phase of a bear market, many times you get this last run up, bear market bounce that sucks everybody in because they feel like the worst is behind us. And you get this stage of complacency. And when you look at this, because again, that is ignoring fundamentals, and fundamentals do matter. I know people can look at flows and technicals, and those are important. But at the end of the day, fundamentals will matter. And when you have companies like Walmart talking about the fact that they have to reassess the consumer strength, and you're taking a look at auto loan delinquencies and credit card delinquencies and anything that's tied to the consumer, we're getting plenty of warnings, yet the equity markets, to your point, are ignoring it. So ultimately, I believe this is the last phase. We have a VIX now, 13, 14, which is complete complacency. And more people are now buying into the fact that we're going to avoid a recession. I believe in very short order, within the next 3 months, the script is going to flip. It's going to show that we are in a recession, and you're going to have the equity markets pricing that in. And then that will be, in our opinion, the buying opportunity to buy the last dip in this bear market. It's no different than any other bear market. And some are trying to say this time is different. And to me, that's the kiss of death when you say this time is different.
So Eddie, I guess between now and when the tide turns, then how are you advising clients at the moment to weather this storm?
So look, in these types of markets, right, one of the things that we've done is, a lot of our clients are retired and they're comfortable getting a nice yield on treasuries and money market as you weather this storm. I mean, look, we've had a big drop last year, and now this year we've recovered some of that drop, and in some areas we're right back to where we were. So we've pretty much had a flat to down market for 2 years. And now we're at an inflection point. And investors have to make a decision. Are you going to bet that the next 6 months are going to continue to be bullish from an equity perspective and is going to go up? Or do you think that it's going to price in the fundamentals that we've given plenty of warning to? So we are perfectly comfortable earning a 5% yield or whatever that yield is that you can get, and wait and see until the dust settles. Because again, I think we've gotten plenty of warnings as to what's to come. And so patience is very difficult as an investor, but patience and process will win in the long haul, in our opinion.
Indeed, yes. As you mentioned there, the VIX, a lot of complacency in the market, and we know that the bell is going to toll at some point, and you've given fair warning. Appreciate you as always, Eddie Ghabour, Key Advisors Wealth Management CEO and co-founder. Thank you so much.
Thank you.